Hello, everyone, and welcome back to another episode of Let's Get Technical series. I am Kavita Agrawal, the founder of EXPInvest, and this is the 68th episode. We are here to talk about some advanced techniques for the purpose of swing trade, and we are going to do a case study on Ashapura mines. Why Ashapura Mines? Ashapura Mine Chem Limited, to be more precise. Now, this stock has a very beautiful trend that has been unfolding for a very long time, but at the same time, the stock is very volatile. But at the same time, it gives wonderful swing trading opportunities. So today, I want to discuss with you how I analyze this particular stock because I've been trading in this stock since many years. And I prefer to trade in stocks like this, which have a very strong uptrend unfolding. What are some of the techniques that we are going to use to cover this case study? We are going to look at key support resistance zones. We are going to identify the phases where strong trends. Obviously, we will use the relative strength index to assess the momentum. We will use the Fibonacci retracement and the projection tools. And of course, we will be using trend lines. Without any further delay, let's move towards the chart. Just the last 30 minutes of the 60-minute webinar, we are going to cover some Q&As from our attendees who are with us on Zoom and the various social media platforms. If you have questions that you want me to answer, don't forget to fill in the stock request. And at the end of the session, I have a very important announcement. So 2 important announcements, in fact. So if you stick around, you might benefit out of them. Right. So let's get started, and I'm going to start sharing my screen now. So a lot of you who watch the session on Facebook or LinkedIn or YouTube or ET have been requesting for full screen. So now I have done that. I hope that'll make you happy. And I know I prefer this mode too, as well as on Zoom. I prefer this mode too. I have multiple formats going on. So it took me some time to figure out how I can go back to full screen view. So for any analysis, what I prefer to do is I prefer to always start with the largest time frame to get a better sense of the unfolding rally or the unfolding trend. And on this stock, Ashapura Mine, what I can see is a very strong uptrend is unfolding. Now, this is the weekly time frame, as you can clearly see. And this is the maiden trend line that I have used. That's why it's at setting 2 in terms of thickness. And then I have cloned the same trend line to identify other resistance points. Now, more recently, what has happened around the 4th of September 23 is that this stock has overcome a resistance trend line and gone into the upside zone. Now, this white rectangles that you're seeing, these actually mark the momentum peaks. So if you look at the RSI right here, this is where on the weekly time frame, the RSI peaked out. So this, for me, represents the momentum high on the stock. So that is what has been marked. Why has this been marked? Because a lot of times I have seen, and if you do past analysis on any stock, you will see this too, that stocks which have very strong momentum, when the momentum tops out, the following rally that the stock experiences is more of a nature of a train where the engine has gone off. So it continues to move forward, but it's only out of inertia. Right? However, that we know is not going to continue forever. At some point, the price has a tendency to, and of course, as anything in technical analysis, this is not a rule, or this is not something that cannot be violated. It's just something that happens very often. Right? What happens very often is when this momentum has peaked out and the price continues to rally to create another high, it has a tendency to correct and come back to the previous momentum peak to get a recharge before it resumes its momentum. And it can do this test twice, sometimes even 3 times. So this becomes potentially a very good entry. And this is what I like to pay attention to. And that is why I have marked it using this rectangle. Now, this rectangle, you will notice, has a white outline and a green filling. Now, this little bit of setting also has a lot of insight for me. The white outline tells me that I have drawn this support resistance on my weekly time frame. And the green filling tells me that this is where the momentum high was forged. Here you will see there is a red filling zone also. This is actually the base out of which this rally began to establish the momentum peak. And because this is the base of a peak, it's colored in red. Now I will move down one time frame lower to the daily time frame. What is the daily time frame also telling me? The daily time frame is also saying the same thing, that the momentum has indeed peaked out. Now, if I want to cover this momentum peak out, I'm going to use this rectangle to capture the closing price, and I'm going to change the outline to yellow color. So even though those two zones overlap, I know that as per the weekly and the daily time frame, there is a momentum peak that lies up there. But this is not the only momentum peak that lies here. There is another momentum peak here as well. The momentum peak on the weekly / the daily time frame has already been acting as very good entry zones for momentum trading. And now what you can see is that Ashapura has again come back to this zone to take entry. So we'll come to the setup in just a while, but let's continue to take a look at the broader trend. You can see some lines on the RSI that I have drawn. What this is showing is that the RSI is establishing peaks as high as the level of plus, and on the downside taking support at the level of 40. When did it start taking support at the level of 40? When it started establishing higher highs. Basically, this is called the phenomena of range shift in RSI, which shows us that if you see this previous trend when the price was actually not really trending upward, or rather it was sloping downward, that time if you look at the range followed by RSI, it started off with a negative range, a negative divergence, and then the RSI kind of maintained it below the level, except for minor exceptions. It maintained itself below the level of 60, and on the downside, it continued to breach the level of 40. Usually, if it were a proper bear trend, this was not a bear trend, right? This was a bull trend correction. So as a result of that, we see the level of 30 did not get violated in the stock. Instead, the stock kept trending higher, right? So this basically tells us that the underlying trend continues to be really strong in this. And if you notice this section, what happened? The stock broke out above the resistance trend line, came back to retest it, and then continued higher towards the next resistance trend line. This time also around, I am expecting similar price activity here, that this support is going to hold. And why would I hold conviction to this? The reason why I would have conviction to this is the Fibonacci. So let's take a measurement of this entire rally. Now, I know this is one rally because this has started from the level of 30 on the RSI, and this is the price peak. So for the purpose of the Fibonacci retracements, I prefer to capture the price peaks, not the momentum peaks. And what I can see is that the price here has retraced between the level of 38.2% and then start to rally. Here, if you see the 38.2% exactly coincided with the base of the momentum peak, which we marked here with this white outline zone. Right. So it was the base, it was the 38.2% retracement, which acted as a perfect entry zone the last time and the price continued to move higher. What are we seeing this time? Let's draw another Fibonacci on this one. And what I'm seeing is 23.6% retracement has been covered already. Now, because I have a momentum peak here, which also serves as the base for the next momentum peak that happened. Now, because this is a strong support zone, and because I have a potential target in the form of this trend line here, the trade setup, if it offers more than 3 risk reward, would be something that I would go forward with. So let's just focus on the price now and let's draw our stop loss. So this entire consolidation that I'm seeing, I would let the stock basically come back down and try to accumulate within the zone. Now that the price has started to come within this zone, this entire zone will become my buying zone, and my stop loss will lie right below the consolidation, which marks this entire zone. And what would be my target? My target would be this trend line. Why? Because previously this trend line has been respected by the price pretty well, right? Now, as you might have guessed, the holding period for this stock, Ashapura, is not going to be small. And that is also because of the personality of the stock. This stock is not meant for short-term holding. If you look at this ATR over here, this shows the average true range of the stock over the last 25 days. So what this is showing, it's a very volatile stock. On an average, it has a tendency to move more than 5% per day, which is too volatile for short-term trading. Right? So if I do take a position in this stock to capture this last leg of the rally, which as you can see here, the last time it moved around 82% in just 63 days, 82% in just 2 months is really good. If I do that, my allocation in the stock is not going to be more than 5% of my total portfolio, right? My stop loss I will try to keep my stop loss less than or not more than 10% by averaging within the buying range. And my target from the current market price itself will be set at this upper trend line established from the current price or today's point where the upper trend line lies. That is where I will hold my target for now, to also take a bit of a conservative approach over there. That shows me around 150% potential. So my risk reward ratio, even today, if I is pretty attractive on the stock. Let's go down another time frame to the 75-minute and see what are we seeing there. So this is the 75-minute time frame. And on the 75-minute time frame, what I can see is that the price of Ashapura has a tendency to show RSI positive divergence every time it comes down into this support zone. The last time or the first time after establishing the momentum peaks over here, it came down to take support here. We can see it gave a positive divergence, rallied, went back up around 44% in just 61 days to retest the previous momentum peak and then started to decline again. Now here again, it has come down and the 75-minute is again showing RSI positive divergence right here. Is a very good indication that what we are suspecting to be a potential good entry zone for us might actually have weightage. Of course, the stock needs to sustain above the level of 388 rupees to confirm this. Let's just do a system check because I'm getting the message that I think the audio is back. Don't worry if you missed out some parts of this because we will be uploading the recording. So if you missed some part of the discussion, you can review the recorded session later on. Don't worry about that. So like I was saying, the 75-minute time frame is again showing this positive divergence, which is a signal for us that the stock can unleash into the rally. Now, 75-minute time frames RSI positive divergence is not a sure shot signal that this is going to unleash into the rally that we are hoping for. Reason being that 75-minute time frame can only give us an indication of what can happen up to next 3 months. But with respect to this rally, I would not expect this target to get achieved within 2 or 3 months. I would expect at least 5 to 6 months for this target to get achieved. So the daily time frame is a more appropriate time frame for us to analyze. Also, if you see the support and resistance zones that we've drawn, they are also done on the basis of the weekly and the daily time frame. So those are the time frames that we are going to stick with on this. Now, I also promised you Elliot Wave analysis, right, on the stock. So let's do that. I'm going to remove this Fibonacci retracement. And let's take a look at the Elliot Wave count. So I'm going to pull out the Elliot Wave tools. Now, for the Elliot Wave count, let's bring our RSI back. And I can see that this stock has forged a double bottom and started to. So usually what I have seen is that it's better to take the lowest point as the wave 1. So this looks like the beginning of the wave 1. And with respect to the wave 2, as long as it doesn't retrace 100% of the wave 1, it is fine. So this looks like a wave 2. This looks like a wave 3. This could be a wave 4 and this could be a wave. This could be wave 4 and this could be a wave 5. So this is as per the daily time frame. With respect to the weekly time frame, however, my count would obviously be different. My count as per the weekly time frame suggests that a new rally has started from this point of time. So from all the way from this point back in 2012, the stock has started a fresh new rally, which might have peaked out here, difficult to say. This was a wave 2. So let's actually change the color of the Elliot tool. I want this thicker and I want this white. And now let's draw the tool. So this could be the wave 1. This could be a wave 2. And this, I believe, what is unfolding on the weekly time frame could be a wave 3. So now there is a chance that this wave 5 that we've drawn was the end of wave 3, which means a wave 4 is unfolding. Now, because the wave 2 of my weekly time frame was a deep wave, I would expect this wave 4 to be a flattish wave and not break structure on my chart and continue the rally. But suppose this wave 4 tends to be a deeper wave, or say coming down to the daily time frame, say this Fibonacci retracement level that I identified over here, that 23.6 is acting as very good resistance. if this gets breached, then what? My stop loss gets triggered, which is totally fine. In that situation, I will again wait for the price to maybe come down lower, retest this trend line, or establish a higher high before I re-enter the stock. At the end of the day, when we are swing trading in the market, it's important to start with understanding where the stock is in terms of stage of trend. It's never a good idea to buy stocks which have already rallied and reached exhaustion. So one such example is actually NMDC. If I show you the chart of NMDC, what you will notice is that NMDC has given a fabulous rally in the past, but on the daily time frame, there is a negative divergence showing up right now. If you look at the weekly time frame as well, on the weekly time frame also, the key resistance trend line has already been tested and the stock has given a massive rally of 200. Now, just because 266% rally has been given doesn't mean it cannot become 500% rally. What is deterring me is the double negative divergence visible on both the weekly as well as the daily time. Plus, the nearest support trend line is pretty far. All of these things together is suggesting that the stock is right now not in a bullish price structure. Versus if we go back to our stock in discussion, we are seeing a rest period over here because of the broader structure and the Elliot wave count not being completed. I would expect the rally to continue. So I think Elliot wave count has the potential to give us a very good idea of what to expect in the stock. But then using Elliot wave count takes significant amount of practice. It doesn't come to you intuitively, or rather it takes a lot of practice to become intuitive to you, first of all. So Ashapurmin Mines is not something that I would go in with very aggressively at this stage of time. I would take time to accumulate my position, keep a hefty stop loss, not expose more than 5% of my total capital. And when my position is created, make sure that my stop loss is set as well as my target is set. Once my entire positions get accumulated and the stock starts going up, I will also be trailing my position with stop losses based on the daily timeframes analysis. So let's start taking questions. Now we have some members with us on Zoom today, and I can see Mohit has raised his hand. Yes, Mohit, go for it.
The wave count that you did in the orange one, so I can see that there has been a leading diagonal structure which has been formulating in there. The essentially where the two ends, we can even think that this is the starting of the first wave.
From which point? The point one on the orange count?
Yes. So like this point now, if you see there has been a zigzag structure. This could be a potential leading diagonal structure, which usually comes in starting of the wave one and the end of the wave five.
Yes, more common there.
Yes, if you see this could be 1, 2, 3, 4, 5. Then after that, when the leading diagonal structure was broken, then the wave one actually started. So essentially, the wave three you have marked, it could be actually wave one, and then this could be essentially wave four. Orange one could actually be the bottom of wave two. This could also be one possibility. The only downside I see, wave three is short; it's not long.
Yes, wave 3 cannot be the shortest wave. That is for sure. And what you are talking about, that could be the wave count, but on the lower time frame than what we are looking at. Because remember, with Elliott wave analysis, there are always multiple wave counts unfolding on different time frames. We have covered 2 on this one. If we go down to the 75-minute time frame, over there you'll be able to see more details of wave count as you just pointed out. So since we are using the daily time frame as decision-making time frame, going down to the 75-minute time frame for this is something that I will do, but when I'm closer to executing my position or in order to make more precise entries.
Kavita, just one question
Yes,
that came to me. One, see now we see that this price has moved from upper band to the lower band again. Doesn't it cast a doubt that probably it will come back all the way and touch the lower side of the your first trend line?
With respect to technicals, there is never going to be any certainty. Even with fundamentals, there's never going to be any certainty. What matters is that you are doing your price trend analysis and it's making sense to you and you have a backup plan. So over here, if my view gets invalidated, that the stock is expected to continue the strong rally that is unfolding on it, if that gets validated, what is the worst scenario that I'm facing, my stop loss will get triggered. Of course, there is a scenario that's actually worse, that is that the stop loss gets skipped. So for that, I am also limiting my allocation to this stock of not more than 5% of my total capital, because this is a pretty volatile stock. So when you're trading in the market, especially when you're doing active trading in the market, it's a constant balancing act of, okay, how much drawdown and am I going to accept on this position, and how much capital am I going to expose to the position, so that if market risk happens, or if even my stop loss gets skipped for whatever reason, then my entire portfolio doesn't get drawn down. I can limit my losses over there. So I've already discussed the alternative scenario, that if the correction continues, my stop loss will get triggered. I will again wait for the next support trend line, and then I will go ahead with the next step of my analysis. So it's a format of a decision tree, you can say, where you know what you will do in the face of all these various outcomes, and your decision making is based on an objective process. So Sahil again is asking about, can it be looked on a longer time frame, as it took 2-3 months? So like I said, the time frame that we are looking at on Ashapura is around 5 to 6 months time frame minimum. From the time of starting to create our position to the time we exit, I am expecting a 5 to 6 months of minimum holding period on this stock. So with that, let's move forward with some stock. And if our Zoom members have any queries, feel free to share the name of the stock, and I'll be more than happy to answer those queries for you on priority. And as for our members who joined us on different social media platforms, it's very important that you fill the stock request form. So I'm sharing the link of the stock request form with you. You can just open this stock request form by visiting the link expinvest.in/stock request, and you'll be able to fill up this form. Now, this form is necessary because SEBI requires research analysts to maintain a database of all the stocks that they've talked about in public. So the members who joined us on Zoom are already registered with us. So that's totally fine. But as for everybody else, you need to fill up the form to raise your questions. But if you have a general question relating to technical analysis, swing trading on the market, or me, feel free to ask that in the comments. I'll be more than happy to take it up. So question that I can see is on Azad Engineering. Mohit is asking, does it look like it's in the fourth wave of the Elliott count? This definitely looks like the first wave. I can even see the smaller wave count. This looks like wave 2. This looks like unfolding of wave 3. Now, this does not, however, look like a completed wave 3. I think it is still the wave 3 that is unfolding, and what I have just marked is actually wave 3 of wave 3. So wave 3, I would expect to continue a little bit more there. So on a lower time frame, actually, what I'm seeing is 1, 2, 3, 4, and then like the final peak of the wave 3 is also left. So let's take a look a little bit at the RSI. So the daily time frame is not giving us enough price structure, but I can see that the 75-minute time frame is lending some support. But then again, my honest opinion about this stock is that this would not be my preferred stock for trading because very illiquid. I would consider this as wave 4 because it has respected the rules of Elliot Wave. It has not entered the territory of wave 1 at all. And over here on the 75-minute time frame, positive divergence is already appearing, which is good. So this would honestly become like a really nice stop loss level to be maintained. And we can expect a target of at least the previous high on this. So Satvik is asking for the analysis of SW Solar. So this is the 75 and this is the daily. Let's refresh the analysis, and weekly is not really very useful. What is the daily trying to tell us? What kind of trend are we actually seeing on this? Again, not a very liquid stock, so not a very good candidate, to be honest, for the purpose of swing trading. But if I had to connect these points, I don't like the price structure over here, the way it's unfolding, negative divergence, this peak out and this correction. The counts are also not very clear. Daily time frame is also suggesting momentum has peaked out, and this stock has a tendency to take a lot of consolidation. So right now, I don't think this looks very attractive from the short-term perspective. Sahil is asking for the analysis of Angel One, and Angel One is a stock that I am following very closely. I'm waiting for a turnaround. But I don't think it's a good time to make fresh entries in Angel One just yet because it's in a downtrend. And I expect this downtrend to continue for a little bit more. Let it establish a bullish structure. Then you go forward with taking fresh position or exploring the possibility of taking fresh position in Angel. So on Instagram, I can see Sonal has asked for, I can see Tell by Yogesh Chaudhary, but guys, you need to fill up the stock request form. So please do that. And I can see that Ms. Sahu has asked for a book suggestion to study advanced technical analysis. I do have a book suggestion. In fact, this is one of my favorite books when it comes to studying technical analysis. And in order to see this book or actually download the PDF, what I will suggest you do is you go to this link. So I have actually shared this book already on my Telegram channel. It's the technical analysis for financial market professionals, the complete resource for financial markets by Dahlquist and Kirkpatrick. And it's a very good book. I personally have studied this book like more than 5-6 times in my lifetime since I started. So feel free to download the book from there, from my Telegram channel itself. You can simply join my Telegram channel and you can search .pdf. There are not many PDFs, only 20 PDFs in the entire channel. You'll be able to find it. Or if you are already on the Telegram app, just go into the app and search Trade with Kavita. Make sure you're joining the correct channel. There are lots of fake channels running with my name and my DP. Don't fall for those scammy groups. Make sure you're joining the correct channel. Good way to tell it's a correct channel is you'll see my photo. Of course, you'll see information about my live sessions. You'll see my analyst comments. And also you will see this ongoing offer on my subscription plans. I'm offering a Independence Day special 15% discount for just today and tomorrow. So you can avail that from my Telegram channel if you're interested. Let's go back here. So let's move on with some stock queries. Akhil is asking for analysis of Motilal Oswal. I am not a big fan of financial sector stocks at this point. So I'm guessing you are asking for Motilal Oswal Financial Services. So I don't think this is a very attractive stock. So this is a stock which falls in the category of NMDC, that it has already given a very strong rally, but I think now the rally is quite exhausted. So I will wait for the stock to reach like a strong support, maybe around 480 rupees, and then assess whether or not I want to further participate in this stock and the entire sector as such. So banking and financial services is something that I will continue to maintain a back foot on. So Krishna Patak on ET Live is saying that the combination of volume price indicator, RSI, MACD is better to analyze trends. And Krishna, that is exactly correct. I like to take a very holistic look when I'm trying to assess trade setups. Because if you look at analysis elements in silos, if you're only looking at volumes, or if you're only looking at chart patterns, or if you're looking at only one time frame, or you're only looking at RSI, it's not going to be enough. Because you will see that if a stock is in bear trend and the RSI shows positive divergence, that the probability of it leading to rally is going to be a lot less, and the probability of it failing is going to be a lot more. So even for a very reliable indicator like RSI, for it to deliver results for you, you need to look at it against the context of price, volume activity, the price structure, the trend, all of those things need to be taken into consideration. So I can see that So stock request form, I can see has not been shared on ET Live. Fine. Let me try to do that. So you'll be able to see it on my screen. This is the link that you need to go to, expinvest.in/stock request. And that is where you need to fill in the form to get your stock queries answered, dear members. So I'm going to leave that link on the screen for just a moment there. And in the meanwhile, I am going to pull out the stock request form. So while the form opens, I can see Mohit is asking, Astral, how much further can it fall for fresh entry? So Mohit, don't chase falling knives with respect to a stock like Astral, which is currently in pretty big correction, even though it's a strong stock. Instead of looking for bottom hunting, look for where is the previous high on a lower time frame and set your resistance or higher high alert there. Once a higher high is established, then see whether you should go ahead and make a position. Because otherwise, if you keep bottom fishing like that, you might not find yourself in a lot of profit at the end of the year. Yes, Mohit, you have your hands raised. Did you have any other question?
Yes, actually, it has already broken all the previous peaks. The only thing I can see is a support zone where it took support price. I think if it falls further, it's like another some more.
So if I look at Astral on the 15-minute and the 75-minute time frame, if I look at the MACD volume, I am seeing a high volume decline and I'm seeing the RSI in a very bearish zone. So I assume you're asking about Astral from a short-term perspective, and it does not look attractive from a short-term perspective at all. So I can see we have Mrityunjay, who's joined us on Instagram and wants to know the analysis of GAIL. So let's take a look at GAIL. Thanks, Mrityunjay, for filling the stock request form. So the stock is doing pretty well. So I take it that you have this position for a rather long-term perspective. And what I will do is I want to draw the trend lines again, because these are like old trend lines and I'm assessing the stock after a really long time. So this is my maiden trend line, thickness 2. And this I'm going to clone at immediate peak, and I can see that the stock has already come above this. Now here, if you notice this negative divergence, what this did was, even though this divergence was established, see, if I recognize what I like to call the real high, this level is exactly what was touched by the stock before it started to rally again. Now, if you look at the recent price activity, the real high again on the daily time frame has been established around here. Well, the stock has already tested this level once, but I would expect it to retest again. So since you have a lot of unrealized profits on the stock and the pullback would bring the stock very close to your buy price, I would suggest you use a trailing stop loss on the stock. So on this wave, I would have suggested a trailing stop loss over here. On this wave, leaving this little spike out, I think 216 would be a very good level for you to maintain your trailing stop loss. It leaves you enough buffer as well as upside. Now, with respect to the upside, now what happens if the stock just takes support on this trend line and continues to go higher? Where would your next resistance be? To find that out, let's take the same trend line. We're going to use 2-3 methods. One would be the trend line extension method, and the other would be the Fibonacci projection tool. So the last time the stock rallied, it went up exactly 2.16%. So it has already covered 2.16%. Moving up, maybe if it goes up to say 3x of the previous rally, I think the immediate target that you can look out for on the stock is around the level of 200. But my bet over here would be more on the stock coming down 15-17% to the level of around 187 for a potential retest before it resumes the rally. So maintain your stop loss, and also this target, don't make it a hard target. Keep moving the target higher up as the stock goes up. If the stock, or when the stocks breaks above the level of around 250, connect back with me for the trailing stop loss again. IRCTC brought at 200. So we have Saurabh Agrawal, who's with us on YouTube. So Saurabh, I hope you're still there. And I can see that you've bought IRCTC at 924. So let's pull out the chart of IRCTC. Every day there's got to be at least one railway stock and one banking stock for sure. So IRCTC, I think, again, railway stocks, obviously the underlying trend is very strong. And now I don't know how many of you are aware, but sometime back I did a very detailed session on dedicated only to railway stocks and how they have a certain pattern that they like to follow. So now on IRCTC, what I am seeing is that the price is currently down to the real, and this is a theme that is very commonly repeated on the IRCTC, RVNL, IRFC stocks, that the stock continues to rally upward, but in between rallies, it comes back to recharge for the next leg to its real high. So this is the real high because this is where the momentum peaked out. And I can see that the price has already given multiple entry points and swing trade opportunities here. So railway stocks, the outlook remains pretty attractive. So my expectation is that once this gets tested, the rally is expected to continue pretty strongly. Now, my stop loss would be right below this volatility low. So this 4th of June low. that would be around the level of 3. And as per the trend line that is drawn, a very conservative target that I would keep would be this trend line, because this trend line I can see has been very commonly tested by the stock, which is around the level of 1,234, right? So that is for you, Saurabh. So Akhil has also asked for power. Let's take a look at Akhil. Let's request for power. Akhil is with us on Zoom. And then we look at Satvik's DMart. So I can see that the momentum peak occurred somewhere over here. And this is like an inertia move that we are seeing. How far it's going to go, very difficult to tell, but it already looks like the stock has established like a double sort of a formation over here and is starting to come back down. So because there is no outright bullish momentum here, I am not very keen about a fresh position on Tata Power. And if you look at the past trend analysis as well, once this momentum peak got established on Tata Power last time as well, it went into consolidation, and only when it established a move above this that the rally came back. Here, because inertia has already taken it forward, I would expect the price to decline back to where this trend line also lies. So this is a confluence of supports, and I would expect the price to continue from there on. Now, since you're saying that you've already purchased it at 420 and you can hold for only 2 weeks, see, we also need to take into consideration the broader market outlook. And my broader market outlook currently is not very positive, right? Because I think there are a lot of sentimental hits coming in the market from the global cues or internal news and stuff. So sentiments are not very good. So you might want to exit the stock. The stop loss I would suggest you to use would be around the level of 392. Suman on ET is asking how any results or quarterly results affect the stocks and which parameters are important to move the stock up and down. Fine. So Suman, you need to understand that when we are doing swing trading for the short term, so from a swing trading perspective, I don't give a lot of attention to earnings results, earnings reports, because first of all, the information that you're seeing in these earning reports is already stale information, and it's already been factored into the price a lot of times. Now, what the absolute impact of results is going to be on stock prices is not something that we can predict, because the impact on price movement depends upon what the result was and what was the expectation for the result was. So the result was good, but the expectation was very good, the price of the stock is going to fall. Or if the result was bad, but the expectation was very bad, then the stock price is going to increase. So what I see is, or what I have experienced since many years is that whatever is the result is ultimately factored into the price, and it pays to pay attention only to price action rather than doing this result-based trading, because you are basically using stale data in order to make your trading decisions over there. Even with respect to long-term trading or investing, I don't look at one single earning result to make my decisions. I look at the trend of earnings. So what is the trend of revenue? What is the trend of earnings? How is the company managing the debt over time? How has the company been servicing the debt? What is the integrity level of the company? How efficient is the company when it comes to capex, when it comes to managing its ratios, when it comes to expanding, or how aggressive is it? How innovative is it? Those are the things that I like to take into consideration. So in the market, any one piece of data is never enough. You have to look at everything in a very consistent manner. So let's take a look at DMart for Satvik. Also, again, on DMart, also, I am seeing that DMart for long-term investing is very good stock, right? It's very well placed. But from a short-term perspective, I think I would rather wait for the stock to come back to the level of at least 4,500 to retest before I make any kind of position here. So if you look at the past also, it has a tendency to establish rallies. So typical of wave 1, that a momentum high is forged. This is the wave 3, it looks like. I would expect the price to pull back, and that would be the establishment of the wave 4. And then I would expect another fresh leg of rally. But until and unless this level doesn't get tested, because the RSI on the daily time frame is showing negative divergence and exhaustion of momentum, I would not touch right now. So we have Bharti with us on YouTube, and Bharti has also filled the stock request form and asked for the analysis of Titan. She has bought it at 3,400. Should she hold or should she book profit? So 3,400 basically means you are right now at break even. Did I read that? Titan 3,400. So you basically entered the current market price. Fine, no problem. I can see Titan. So of course, Titan is like a super good stock, right? What I am seeing is that the underlying momentum in the stock is definitely really strong. This is what I've been talking about, guys. This is exactly what I've been talking about. So this is where the momentum had peaked. Now, since this momentum peaked over here, you can see that the price continued higher, but the RSI on the daily time frame showed a bit of a negative divergence. Now, the price has come back to retest the real peak established by the momentum high. And now what do we see? We see a positive divergence. This is very common and this is a very good place for entry on the stock. Going down one time frame lower, what I am seeing here is the 75-minute time frame has also led with similar indication, and this was actually a very good entry point. So we did take a trade over there, did very well. Stock has again come down. So if I do a Fibonacci against this, I can see the stock retraced again 61.8% and started to rally. So this would make a really nice stop loss, 32.75. But if the market actually continues downward, there is nothing stopping the stock from coming down and retesting 3,225 again. So it's better to keep this stop loss further lower around the level of maybe 3,140. So I think for you, Bharti, it's better you continue to hold the stock because it has strong momentum and it is showing signs of short-term reversal. I would expect a minimum target on the stock at the level of 3,850 rupees from the current market. So Satvik is asking, do I prefer to enter a stock just a few days before the results, considering the volatility? I don't pay attention to the results and volatility and stuff. The only thing I pay attention to are my charts. If my price structure, if my RSI, if my volume, if my wave count and multi-time frame analysis is suggesting a high probability setup, I will take the trade. Otherwise, not. Next, we have Mr. Murthy with us asking for the analysis of South Bank. Banks, again, like I said, not a big fan of. And you are saying that you're holding the stock since 3 months. Should you accumulate more in this stock? Let's see. Fine, I can see a trend unfolding here. So since I'm drawing the trend line on the weekly, I want to keep it white. And since this was the maiden, I want to keep it 2. So I can see that there is really strong trend, but I can also see that the stock is right now trending lower. So until and unless, so I don't think it is a very good place to accumulate the stock at all. You've actually bought the stock on the wrong side of the trend. If you would have purchased the stock before February, you would have done great. You would have booked fantastic profits. But looks like you purchased probably out of FOMO. You saw a rally and you got anchored or recency bias affected you. And then you've purchased this over here. Not a very good idea. So again, I can see that there was really strong momentum on the stock here as well as here. And so this becomes our previous peak and the most recent over here. So this becomes an important resistance. Now these internal peaks are surely there, but I'm not seeing a lot of strength coming in from them. And if I take a Fibonacci of this, I am seeing 38.2% being tested right now. But honestly, with respect to South Bank, until and unless the stock starts establishing higher highs, I would not recommend further allocations here. In fact, on the 75-minute time frame, the RSI is showing a negative range shift, which is indication that the correction can actually continue. So this is not a very attractive stock right now for making either fresh entry or accumulating more. In fact, since you have a position, I think the stop loss has been triggered and you should consider getting out of the stock. The stop loss, like you should not expose your capital to any further risk in this particular stock. Moving on to Dixon's analysis for Harish, who's with us on Instagram. So Dixon, 4,400 is the average. Now, Dixon is a very strong stock, very strong underlying trend. And I think the momentum keeps peaking, which is a very good suggestion that every dip is a fantastic opportunity to buy the stock. I am expecting a new leg of rally. Now, overall in the IT sector, I am quite bullish. So naturally, I'm quite bullish in Dixon as well. And for Dixon, what I can see is an accelerated rally going on with no sign of exhaustion or negative divergence whatsoever. My immediate target on Dixon would be around the level of 15 to 16,000 rupees. And the stop loss that I would suggest you to maintain would be around the level of 9,900. Massive stop loss, right? But again, if you want to accumulate, try to catch the stock around the level of 1,100, 11,300. And since you already have an active position, I would suggest continue to hold on to the stock. So 4,400 is a pretty good entry point on this. So we have two requests for JIOFinance from viewers. Both are coincidentally on ET Market Livestream. One is from Suman and the other is from Mr. Bose. So let's take a look at JIOFinance. So Mr. Bose wants the long-term view. So I think, see, I don't have enough chart data here to do a long-term assessment for you, but I think JIOFinance is a pretty attractive stock from a long-term view. However, because of limited price data available, I'm not able to perform a lot of technical analysis from a long-term perspective here. From a shorter-term perspective, I think a time to make fresh entry in the stock would be this momentum peak has already been breached. So I would look at the base of this momentum peak, which is over here. So either the stock comes back to this level, around the level of 280, I would take the risk of going ahead and adding more of the stock, or the stock starts establishing higher high. Basically, a new leg of uptrend is when I would potentially. So with that, we come to the end of today's session. Thank you so much for joining in. And as I promised, there is an announcement for you. Number one, I have introduced Hindi version of the video. So if you are somebody who appreciates content in Hindi, then don't worry, I will be uploading the recording of this session with no audio issues whatsoever in both English and Hindi on my YouTube channel. So you can follow me on YouTube by searching my name. And I will also share the link of the YouTube channel with you in comments. So what you need to do to search my YouTube channel is just look up my name, Kavita Agrawal, CMT CFA, and you'll be able to see that I started uploading Hindi videos. I know it's a little funny because I'm using AI to basically translate my English videos. So it's a little extreme. It's going to get better. So bear with me. I hope to reach a wider audience. So if you have family members or friends who are more comfortable with Hindi content, do invite them to watch those videos. And also, like I said, tomorrow's Independence Day. So in order to celebrate that, and I've also launched a brand new website, better looking website, more functional. To celebrate both of them, I am giving a 15% discount on my subscription services. So if you want to trade with me, if you want to do short-term swing trading, or if you want to do long-term investing, or if you want to learn swing trading with me, from me, right? You can avail a 15% discount. Again, information about that has already been shared on my Telegram channel. So you just need to join the channel Trade with Kavita to get more information about that. And I have a sticky note here, which asks me to remind you to please this video if you found the content that has been shared useful. Make sure that you drop your comments, because whatever comments or feedback you drop, I take that into consideration, and that always helps me improve the quality and the output of my content. So I would really appreciate that. And of course, don't forget to subscribe to my YouTube channel so that you can know about the next session I will be doing. So I come live every Wednesday and every Friday at 5 p.m. So I will see you again on Friday in the Market Outlook series, where we will discuss Nifty, Bank Nifty, intersector charts, and just try to assess where the momentum is headed so we can put our cash there. Thank you so much for being a great audience, and namaste.